The US dollar has had the worst start to a year and half a century, with its index losing over 10% in the first 6 months of the year. Is this the end of the dollar superiority? I think that's the main question on investors' mind. Thanks for joining us at xm.com. We'll be examining that question exactly in this special report. I'm Christina Marujos, and with me today is our lead market analyst, Rafi Boyadjian. So, Rafi, let's first take a step back and analyze why the greenback is experiencing this unusual weakness lately. Why are investors so bearish on the US dollar?
So, Christina, as you said, the dollar hasn't had a pretty good start to 2025. It's the worst performer, in fact, among the other major FX currencies. So it's all about the trade war. And what's kind of odd about this time around is that, when we look back at the first trade war, the dollar didn't really suffer that much. And in fact, the main concern among investors was the impact on other currencies, on other economies. This time around, the entire concern is pretty much focused on the US economy, the US dollar. And the reason for that is because the first time around, really, the conflict was focused around the US and China relationship. This time around, it's pretty much the US versus the rest of the world. So potentially, if the US is negotiating trade agreements with every single country in the world, then really raises the risks. It also creates a lot of uncertainty for businesses. And this is pretty much why investors have become so gloomy about the US dollar, is because if we're seeing tariffs across the board, then that's really going to raise inflation. So you may wonder, if inflation is rising and the Fed is not going to be cutting rates, might even have to raise rates, why is that then negative for the dollar? Well, that's because in such a scenario, you cannot be optimistic about the US economy. And if you're negative about an economy, then the currency tends to suffer. So we're kind of looking at a stagflationary scenario. Should we see an escalation or further escalation in this trade war, or at least even if we do get some trade deals, we don't get trade deals with some key trading partners. And so we see significant increase in US import costs, which is then passed on to the consumer. And so the Fed doesn't cut rates, and we see the US economy heading towards a recession. Now, of course, what markets are kind of anticipating, though, is a somewhat better scenario where the US will be signing trade deals. We've already seen like 2 or 3 trade deals announcements already. We may get a few more in the next few days. But I think here, even if we get trade deals and the 10% tariff, which is the universal rate, which is, I guess, the average tariff rate that the US is now kind of looking at, that turns out to be a one-off effect. The Fed has said it wants to wait a little bit to see how much, what that impact is going to be. But assuming this is a one-off effect, the Fed does start cutting rates, then even in this scenario, what we end up with is the Fed is cutting rates because inflation no longer poses a risk. And then that, of course, is negative for the dollar. So we have a scenario where, in the first case, the dollar is falling for the wrong reasons. And the second scenario, the dollar is falling for the right reasons. Now, one potential question mark about the second scenario is that if you get trade deals, then the US economy might actually start to come out of this slowdown or suffer only a minor slowdown, in which case the Fed doesn't cut rates very significantly. But I think we have to consider here is that other central banks have already cut rates quite sharply. So they're either on pause now or they're close to ending their easing cycle, in which case the dollar on a relative basis, the Fed has some room to cut, and that's going to be negative for the dollar, even if those cuts aren't very significant.
But let's look at another scenario, Rafi. Do you foresee maybe a scenario that isn't so bearish on the US dollar?
So that is a very good question, Christina. And right now, if we have to consider a third scenario, it's in fact a scenario where we get stagflation, even in the situation where we have trade deals. And this is because partly I did answer this in my first question, in the sense that even if we get trade deals, the US economy might not suffer much. And so the Fed, isn't able to cut rates very significantly, or we might even get inflation proving to be persistent, because of course we're still above 2% inflation in the US. We're seeing some supply chain disruptions, possibly from onshoring. We might even get some labor shortages because of Trump's crackdown on migrants. So we're not quite sure how low inflation is going to go in the US. So the Fed might have to stay on pause potentially. So a stagflationary situation cannot be ruled out, even if we get some trade deals coming in the next few weeks. So this is a potential risk for the dollar. However, of course, there is a prospect of the US economy recovering much later on. So, for example, we've got the big budget bill passed by Congress that might stimulate the US economy. The onshoring of US production being brought back into the US, that starts to boost the US economy, but all this would come much later on. And I think in the more short to medium term, I think it's hard to see a scenario where the dollar isn't going to be so bearish. The other thing, of course, is potential geopolitical crisis that might boost the dollar, like we saw in the Israel-Iran conflict. But this was a short-term effect, and it wasn't a very huge boost to the dollar, which kind of does raise question marks about the US dollar safe haven appeal.
So as things stand right now, it seems that the dollar safe haven status isn't foolproof anymore. What alternatives, though, are gaining on the back of the weaker dollar?
So we shouldn't obviously dismiss the dollar's safety appeal completely, but we have seen, of course, in recent years, not just now during the trade war, that gold has been becoming increasingly more important in terms of safety flows, and in terms of central banks relying on it as a important reserve, and they're kind of de-dollarizing. They're kind of trying to have more gold reserves than dollar reserves, which makes them kind of somewhat more immune from things such as US sanctions, for example. And so we're seeing this also during the trade war. Gold has really soared over the past year, although lately the rally is on somewhat of a pause. But on the whole, gold's prospects have really been bolstered by Trump's policies, his protectionist policies, which has really raised question marks about the dollar's safe haven appeal, and also the dollar's appeal as the world's #1 reserve currency. The Japanese yen might also come in to attract some attention every now and then, but I think the dollar's main competitor right now is gold.
I see. Rafi, thanks so much. This was a special report here at XM.com.